Roman, welcome to the show.
Thank you for having me, Brandon.
Well, this is a fun one for me. We go way back, but before we start talking about our relationship, maybe you can introduce yourself and tell our audience a little bit about Casa Living.
Absolutely. So, my name is Roman Pedan. I'm the founder and CEO of Kasa Living. Think of Kasa as a global accommodations brand for the modern traveler. So, a whole hotel brand that bridges the gap between Airbnb and Marriott. Brandon, I'm guessing you've had experience staying at Airbnbs. You've probably had some pretty good ones,
I have, yep.
and maybe some that haven't been as reliable, and it's because on the other end there's an individual, a host whose first primary job is not being a hotelier, and they might be at a meeting when you have a Wi-Fi issue, and for a lot of trip types that's just not acceptable. You need the trip to be cohesive and reliably deliver on the core promises of a quiet, restful night's sleep. Casa delivers that uniqueness and digitally driven stay of Airbnb, but we are the actual host and a brand that you can trust. And so we control the customer service, the Wi Fi, the comfort of the mattress, the light in the room, and aim to deliver a reliable experience for the guest. That's the guest side. The real magic happens on the ownership side, where we have built a hospitality operating system that fundamentally improves the business model of operating hospitality properties. Think of it as you have like a genie that you can make a hotel property more profitable, primarily by lowering the cost structure. So removing staffing, centralizing systems, automating things, and also improving the revenue model of the properties. And that makes properties anywhere between 30 and over 100% more profitable at the gross operating profit level. So quite substantial. We currently operate about 75 properties around the country. We operate apartment buildings where we're full floors, hotel properties where we're the entire building, and we have a budding partnership with a large private equity firm in single family homes. One thing I'm very proud of is we operate the top property in a few cities as ranked on TripAdvisor. So we're the number one property in Chicago, in Seattle, in Denver, top five property in San Francisco, and Austin. It's like it's the feeling of pride you have for one of your children having a good grade on the report card, and our team takes immense pride in delivering an experience that guests really resonate with.
Awesome. I love that. Well, I'm excited to dig in with you and learn more about cost of living and kind of what the outlook is for the space. And before we do that, let's talk about your journey as an entrepreneur. Maybe give us the background before you started cost of living, kind of what made you or kind of what brought you to this point in your career.
You know, I feel immensely lucky to even have the opportunity to build the business. And that feeling is amplified by the current context we live in. So I was born originally in Ukraine. My family came over to the US when I was 2. They took a pretty meaningful risk to come to a country where they didn't know the language and didn't have a community. And my family is also Jewish. We were Jewish refugees from Ukraine. And in another world, on both fronts, I'd probably be fighting in a war instead of building something that I feel immensely passionate about and is at the intersection of my interests. So at the core of my experience, is this feeling of responsibility to do right by the risk of my family, my parents, and generations before, and to do so in a place that provides opportunity to build something of substance through hard work. Specifically to Casa, I have always loved the elements that intersect Casa. So I grew up having a fascination with real estate, more kind of like for lack of a better word, like real estate porn growing up, like going to see every open house that was on the block, and just being excited that the space that we live in or see and feel can really impact the way things work in a community and a city. But I also love technology for almost a similar reason. You write a line of code and it impacts the world in a really dramatic way. For a long time, I studied computer science in undergrad. I also studied real estate and always thought these two worlds were were like oil and water, or two lanes of a highway that were never going to come together. And have been excited to see the increasing connection between technology and real estate and hospitality in a profound way. I started my career in real estate and worked at Walton Street Capital and KKR, really primarily on the investing side, focused on apartment and hotel investing. Though we spent time on across asset class, and at KKR, I was really fortunate to work alongside the team that was kind of the early team to build their platform, and always was looking for a way to combine real estate with technology, though was not really finding that opportunity within the real estate investing ecosystem. And so that led me to Stanford Business School, with the hope that I could use that as a laboratory to find a combination that resonated. And I took the most analytical and nerdy approach one could imagine to trying to figure out what was the right problem to solve. I think I made a list of like 200 companies, all in real estate tech, trying to figure out which one was a interesting application of what I was good at and was a product that I thought the world needed. And that one of those 200 was Juniper Square. And I remember having an early conversation with Alex, realizing it was a product that the world needed, and was lucky enough to be an intern when y'all were first starting. I remember meeting you that summer. I think it was 2015.
Yeah, no, I remember that. It was a good time. I think it was probably 2016, and there was probably
Yeah, yeah,
five
yeah.
of
That's
us
right.
at the company at that time. And some of the work that you did with us stuck around for many years, long after your internship ended. So we appreciate that. You mentioned computer science in real estate. That's not something that I hear very often. And you kind of highlighted, real estate experience was around the form and doing open houses. But did you have a sense or a hypothesis of like how these two worlds could come together? Like, what is, for someone who's listening to this, who's like, how does a computer scientist think about real estate? Like, what would you tell them? Like, how did you think about it, prior to really like digging into the industry and actually understanding what was happening?
Yeah, I mean, at the core, I think these two industries are allergic to each other, and actually quite similar in like kind of going back to what I said earlier. Real estate is intended to affect the way we live, work, office, and do so in a durable, profound way. You build a building, it affects everything around it. And similarly, you write a line of code and it's very durable. It changes the way people interact with each other, with technology, and with systems around technology and each other. And so my hypothesis was rooted in finding ways that technology can, at the core, remove cost from operating real estate or delivering on an experience. And so the either remove costs or fundamentally improve the income that an owner could generate. That's my hypothesis. The reason there's an allergy between these two worlds is technology can move very quickly. You can write a line of code in an afternoon and see it live, and it takes a year plus to build a building. And so the one of the inputs into proving that you actually can generate value for real estate owners is time. And one of the things in technology that always felt like technology was a shortcut on was time. And so the approach to technology maybe 10, 20 years ago, and even in the last decade with certain ideas, was one where you thought you could shortcut the approach to entering the real estate market with a product that was good for the real estate, but perhaps wasn't willing to be patient enough to demonstrate its value through cycle, through sales, through different financing environments, et cetera. And so at the core of what I was interested in was, how do you lower the costs of operating assets and deliver a better customer experience at the same time, but do so in a way that was patient and mindful of the time scale of real estate.
Yeah, I like that. And in many ways, it's come full circle in this time scale of real estate, and the importance of patience plays out. Especially as we're talking about the current market dynamics, where people are realizing, some of the challenges of illiquidity, but also some of the benefits of illiquidity and kind of the way that real estate's been structured.
Yeah, 100%. And I think in a moment like this, where there's a bit more pain in the real estate market, right? You have rising fixed costs, whether that's insurance or taxes or debt service or labor costs, which in many asset classes has become more of an intractable problem with current systems and processes. Technology can be not necessarily the panacea, but a meaningful painkiller to lower costs while there's otherwise inflationary pressures that are kind of like fixed in the P&L. So 100%.
So before you got to start Cost of Living, we talked about your internship at Juniper Square. Kind of what did you do? Like, was it at Stanford Business School that you decided to become an entrepreneur? Like, what point did you know that starting your own business was the right thing to do? And then how did it's a multi-part question, but then how did you figure out that, starting Casa was the right business problem to focus on?
Yeah, it's interesting. My framework, and I borrowed, I think, a common framework perhaps for what one should do if they're so lucky, is finding something that you really love, finding something that you're not just good at but uniquely suited for, and then something that creates value. And so I was searching for that. I was searching, and the hypothesis I had was very few people had the technology background and the real estate background, like deep background in both. And so I should really focus my attention on that part of the world, especially considering I really loved it. But then that got me to that 200-line spreadsheet, which in that spreadsheet, like there were a lot of ideas that either didn't resonate or I did not think would be really good ones. I was really excited about Juniper Square because it stood out and you're not paying me to say this, but it was a problem that I knew many fund managers had, and it was a solution that was without a great. It was a problem without a great solution. At the same time, I loved the team. I loved the working in this, and I had immense confidence that it was going to be a big business, and it's been really gratifying from the sidelines to watch y'all grow. It wasn't the thing that I was like most passionate about, and the problem that I felt as if I was most uniquely suited to solve. And so, I the the decision to start Casa kind of came from a lot of moments of reflection of like, what have I turned to most frequently? And I recalled when I first learned about Airbnb that I thought it was an idea that was necessary for a growing a consumer that was increasingly flexible. I was increasingly seeking flexibility in my life. I was increasingly seeking something different in the type of accommodations I was looking for. It was I actually applied to Airbnb when I heard about it in 2010. I sent a snail letter to Brian Chesky, which I'm like a little embarrassed to reread now, and realize that I sent a letter to someone who probably didn't receive it. But I always was captivated by the fact that Airbnb was building something that was direly desired by consumers. It was almost like a cry for help, and that we were investing at KKR and at Walton Street in what existed. We couldn't reinvent an asset class. And so we were investing in hotels that I did not think were the kinds of hotels that were going to durably be the kinds that the consumer of today really wanted. They were built on very analog rails. They were built on a labor structure that was not conducive to the just structural increases in the cost of operating those properties. And increasingly, we were buying apartment buildings at the same time that were amenitized and programmed like hotels, with nice gyms and cabanas by the pool. And yet they were preventing a hospitality activation to them. Airbnb was banned, understandably, in those properties because the lack of a professional manager meant that you were sometimes letting in folks into the building that weren't vetted, that might throw a party and impact the community. And so it was looked at the model of Airbnb and the idea of activating multifamily space as in a more hospitality forward way to fit with how those properties were being built was viewed in very much like a as an alert was kind of an allergic reaction in the apartment community when it was actually when it was actually an opportunity. And so that was kind of the core of the realization that led me to start Casa. It was something I always was really excited about that fit my unique kind of thing that I brought into the world that I was uniquely capable about. And that looking at the world from an owner's perspective, there were trends that owners wanted to figure out how to capitalize on, whether it was the digitization of the consumer, the increased flexibility in how people live and work, or the increased cost structure of properties, that a solution was necessary, but a solution didn't exist. And so I started Casa to offer that solution to owners and profoundly to travelers.
Was it it sounds like, you had a lot of informed experience. You had your time investing in hotels and then multifamily. You understood real estate. You obviously had a background in technology. Was there an aha moment that, like, this is the thing to do? Or, how did you kind of put pen to paper and actually say, I want to do this? And did you do it alone? Do you have partners? Maybe what's the kind of founding story? You've kind of led us up to what's informed the founding story, but what is that founding story of Casa Living?
So the founding story was while I was at Juniper Square. I was thinking about this in a lot of depth. We had actually, my mom passed away in 2015, and one of the things my family did, my dad and my brother did to bring us together, and we always were kind of interested in real estate as immigrants growing up in the U.S. was buy a really small apartment building near our house. It was a 3-unit apartment building, and run it as a as what today would be a casa, but at the time, for lack of the brand, was an Airbnb style property. And we were generating on that property something, 100% cash on cash yield every year. And like a yield on cost that was in excess of 25%. And so it was just like metrics that are impossible to find in any asset class that I've seen in real estate. But we were having a lot of difficulty actually operating the property. It was very much run like a mom and pop property. And so there was in the back of my head, the tooling didn't exist, the brand didn't exist, and yet the real estate opportunity, fundamentally fueled by the fact that consumers wanted this product, was very obvious. And so early in while I was at Juniper Square, I thought, why don't we see if we can build this in a way that is both that solves for that need, that solves for the need for a brand, that solves for the need for the tooling, et cetera. And so our initial hope was to find apartment developers who were in lease up and ask to take a few units in their community and run them as furnished flexible rentals. Uh, Given the fact that I'd lived in the real estate world for a long time and had built strong relationships within that community, I thought it would be a breeze to get owners to agree to have us operate a small hotel in their apartment building. And what instead happened was on my birthday in 2016, in August 2016, I was dialing for dollars, asking owners if they'd be willing to give us a couple of units in their mostly vacant apartment building, and just getting no after no. We went door to door. We got warm intros. We finally got one partner in the Bay Area called Prometheus, who the president of that company, Jackie, she took a risk on us and gave us 4 units in the property. We furnished them by sleeping on the floor of the apartments and like just getting it done. Like we didn't have a playbook yet. And what was obvious right away was there was tremendous demand for the product. We were financing the business initially off a credit card from JP Morgan Chase to buy the furniture. So we were like sleeping a little uneasy. But the first moment that we put the units live, and at first our demand was coming through Airbnb, we have since really professionalized and and diversified the way we generate demand. But we were booked like 5 minutes after we put the properties on Airbnb, and so there was an obvious need from the consumer side, and we realized over time, though it was hard to get those units initially, that there was a need from the owner side. The lease up was risky and anxiety ridden for an apartment building, and there was an opportunity to generate a lot more cash for the owner by operating some of the units as flexible furnished rentals to satisfy the growing demand. But that was the aha moment, was the speed at which we were able to operate to generate demand, and the need for an operator like this with the experience working with my dad in Massachusetts.
What do you think? I mean, so this is what, 2016, 2017, is that right?
That's right. Yeah.
And so you had Airbnb as your platform at the time for distribution, but I presume there were hundreds, if not thousands, maybe even tens of thousands of other options in San Francisco, right? And so what do you think, like, what stood out, or what was it that was unique about the offering back then that, allowed you to fill the unit so quickly? Do you have do you kind of have a hypothesis with the benefit of hindsight?
Yeah, I think the inventory and this is kind of the root of what's amazing about Airbnb, but also why Casa really complements it. It's that the typical Airbnb host is a individual, and that individual is not a professional hotelier. And as a result, they are not 24/7. They're not ensuring that the sheet, they're clean white sheets, comfortable bed. That some of them do, and that's kind of the ethos of Airbnb. It's your best and your worst experience. And what we were able to convey to the consumer is that you will have your reliable experience with Casa. We're 24/7. We have strong Wi-Fi that we are held accountable for if the experience isn't great. As a brand, we think about every single detail of your stay and of your journey, and work to ensure that we deliver a experience that's befitting of our ambitions. And we have a company value, which is to be a Hall of Fame host. And it's really not to be just the typical host on Airbnb, but to be the host that cares about your stay most, and delivers on not just the lowest level of Maslow's hierarchy of needs, like the things that you expect out of a brand and don't always get out of an individual, but the things above that that show care and build connection. And so we were able to, through our photography, through our descriptions, through the fact that through the fact that we showed up as a brand rather than an individual, attract a guest that was seeking that experience, and which it was lacking then and is still lacking. There are still not enough properties that look and feel like an Airbnb, but are professionally managed, and that are branded with a certain experience that consumers grow to love.
Awesome. I love it. So, fast forward to today. Give us kind of the quick snapshot by the numbers: size, scale, employees, properties, however you classify kind of the metrics that drive the business and the people that make it possible.
Yeah. So I think we've had over 1 million reservation nights. We have over 75 properties across 40 cities. We have about 245 team members at the company, who are passionate about delivering a great stay, and also are working on the infrastructure that ensures that the experience gets ever better for the guest, and the profitability grows for the owner over time. We're partnered with some of the largest. We've really focused on building trust with some of the largest owners of apartments and hotels in the country. So we have scaled partnerships with Starwood Capital, with TPG, with KKR, with growing partnerships with Greystar, and many others like them. So that's kind of and one last, we there have been companies that have grown with similar models in which improve the profitability of various asset classes through leasing those spaces. Obviously, WeWork is the most well known. Our model is much closer to Industrious's model in the co-working space. So we manage properties for a fee. That's also the model that Marriott, Hilton, and 100 other hotel brands and operators like them have focused on, which is more durable both for us as the manager and brand and for owners as our partners. It's not the quick get rich quick, grow at all cost approach to building the business, nor is it the not durable, but perhaps the highest cash flow in the moment of a lease that's above market for the owner. But it is the highest and best use for the owner long term and more durable. And for us, it ensures that we are a trusted partner for decades to come.
So it sounds like today the primary way to book a unit on Casa is through your website. Is that right?
So we, much like Marriott and Hilton and others, list across channels. So you can find a Marriott on Expedia and Booking.com. We make sure that we are in as many stores as possible. So we want, and our client is the owner, so we want to make sure that we're maximizing the profitability of their properties, and we do that by really being agnostic around the channel that the guest comes in through. So we are on Expedia, on Booking.com, on Airbnb. We're also within the global distribution system, which is how you get into the travel management companies. That's really the tooling that ensures that when you book through Concur and Amex Global Business Travel for your business trips, you can find Casa and stay with us. And so we're across all channels. Casa.com is the largest, but not the majority of our demand. So it's about 40% of our demand. And that's been really exciting to see because we're that many of those guests are starting their journeys with finding us on Expedia, and then their second, third, fourth stay is through Casa.com.
And so you mentioned management contract, and I'm familiar with kind of the hospitality world. Just for our listeners, especially for our listeners who are asset owners who maybe own hospitality or multifamily units, which I know many of you all listening do, like walk us through how do they find, do they find the real estate, and then do they find you as the operating platform to sit on top of it? Do you find the real estate and try to find, somebody to buy that piece of real estate? Like, what does that right framework look like, to optimize for success for both you as Casa and the ultimate, asset owner slash landlord?
I would say I did improv for a brief period, though I was not very talented, and I'd say yes and to that. So the our primarily, and I think this has been an important element of the trust we've built with the real estate community and our partners. We've grown through same partner expansion. So we've partnered with some very large owners, and those owners bring us new deals that they are working on, and we help them to understand whether we can make them more profit with a Casa operation in the property. So, for example, if an owner is looking at a apartment to purchase an apartment that is mid development and is trying to figure out how to make the math work in today's interest rate environment and a new supply picture that in many markets, especially in the Sun Belt, has been at historic levels as a percentage of existing inventory and in total inventory. More apartments are being built today than at any point in the past 40 years. And so they are finding it challenging to figure out how to deploy capital into those deals. We can often generate a very meaningful amount of yield expansion on those deals because we're able to generate cash flow earlier in those properties. You're leasing up over 18 to 24 months in the traditional business plan. With Casa, we will furnish and operate multiple floors in the property and start generating cash flow at day zero. And then once the property is stabilized, we increase the yield that the property generates because the short stay furnished units generate on a net basis, so after expenses, more profit than the 12-month unfurnished units do. And to put numbers to it, we were looking at a fairly typical deal in Austin recently that a partner brought to us, where the going in yield without Kasa was a 5.5. Although at the purchase price that ended up getting sold was a little bit tighter than that. We were looking at it as a 50-50 Kasa and unfurnished rental deal. And we got to at over a 9% yield on cost, and an even a far greater, far greater cash on cash yield in terms of the accretion. And that was at 50%. If we were 100% Casa, you generate a yield beyond what I'm saying. And so, to answer your question, our existing partners will bring deals to us, and new partners will bring an apartment deal or a hotel and ask us to underwrite it. We'll underwrite it and give a 50-50 view on how well we can do in that property. And then that partner can decide whether it fits their investment mandate. We also do periodically look at deals that we hear in the market. We're currently looking at an off-market deal in New York we're very excited about, where the knowledge of our platform means the existing owner thinks we might be uniquely suited to help catalyze an acquisition. We have limited resources, and so we can only process so many of those kinds of deals. So the more typical model is when partners, whether they're existing or new ones, bring the deals to us.
And when you see a deal, do you typically, you mentioned, you can begin to have revenue at day zero. Do people typically bring you in as a kind of, short to medium term stopgap solution, and then it extends into something more permanent? Or is the view, do your management contracts stipulate that you need to be involved for a minimum period of time in order to stabilize and reap the benefits of the work and the value that you're adding? Or what does that relationship between you and the asset owner look like, most typically?
Our mindset at the company is that we earn the business every day from our partners by generating more income than they could generate without us. And so that's the one metric that matters at Casa. How much operating profit are we generating for our owners? I would near guarantee, if you ask any 245 people, they'd say that's what we're optimizing for. That being said, you need some term to be able to prove that out. And so depending on the asset class, we have kind of different standards for hotels versus apartments. We'll ask for some term in order to be able to demonstrate the value proposition. And then we'll give owners a performance out. So if we're not generating the value that we promised, or that will lead them to be confident we're better than their next best alternative, then we'll allow the owner to terminate. And typically, our contracts are shorter in multifamily and longer in on the hotel side, which is a function of the lender requirements and different requirements that our partners have in those in apartments versus hotels.
Interesting. Hotels are interesting. So I understand intuitively apartments, and I don't know why that's more intuitive to me, but why Casa in a hotel when in theory the hotel, effectively is operating short-term furnished rentals just on a nightly basis to guess. Am I missing something, or how do you think about it? Because right on your website it says tech-enabled institutional hotel management for more than 150 key hotels. Or less than 150 key hotels, I guess.
Yeah. So I think I'm really glad you asked that question. Hotels are kind of the purest form of like really deeply understanding our value proposition, and our value proposition, maybe 2/3 of it, is lowering the cost structure of how these hotels operate. So and then we apply that same really strong cost structure and our strong revenue muscles to how we operate in apartments. But the before in apartments was a 12-month unfurnished rental, and the before in hotels was the hotel operating already as a hotel. So it just very purely shows the improvement in operating hospitality that we generate. And the improvement comes from us going basically line by line in a hotel P&L, and either eliminating automating or centralizing functions. And so an example is housekeeping, which was purely an operational change for us. We clean once a stay versus once a night as required by many of the brands. The reality is the consumer is not willing to pay the incremental cost that the added cleanings will bring. There certainly is a category of consumer who wants that kind of pampering. We aren't the brand for them, but the majority of travelers today don't clean their homes every night and don't need their apartments or hotel rooms on the road to be cleaned every night, and would rather just have a better price, and the owner would rather have a better cost structure. We also centralize and automate other functions. So finance and accounting usually has sat at the hotel property in most cases. And there really isn't a need to have an overnight auditor and a controller at a hotel property. You can automate a lot of that. You can centralize it. And so we've done that. And that's an example, one line item that, is a portion of the P&L, and we've thought how to improve it. There's no front desk at any Kasa property. And so every guest checks in on their mobile device. They get a key code to enter the exterior of the building and a key code for their unit. And they text us or call us if they need something. It allows us actually to deliver kind of a more personalized experience over time, which may be surprising, but it's reflective in the reviews that I shared earlier and the TripAdvisor scores that I shared earlier. And it lowers the cost of operating a property. And to put real numbers to it, so for the trailing numbers on a hotel that we operate in, I'm sitting in New York City in the Lower East Side of Manhattan, which I use as an example because New York is maybe the hardest gym in the world to train in. It's like, if you can make it here, you can make it anywhere, kind of thing. And the owner previously was generating at the GOP level max year like a 41% GOP margin. We are operating the property at a 70% trailing GOP margin. So a significant improvement in margin, and our revenue performance is also stronger before and after for a variety of distribution related reasons and revenue management related reasons. But to answer your question, that's kind of the purest measure of our value proposition. Did we take a hotel and make it more profitable, make the review scores higher versus how it was operating before? And we have case studies across the country that demonstrate that. And that's really the foundation and the fundamental value proposition of the business.
So there's been we've been through. Well, let me back up. What year did you start Casa officially?
Officially, we started August 2016, and we raised capital in December 2018 for outside capital. But we've been, already running the business and hosting guests for a while before then.
Got it. So now we're recording this at the end of 2023. We're kind of out of the pandemic. What have you kind of observed in trends in, travel and leisure and hospitality kind of since the founding of the business in 2016 till now? And, what are you kind of looking at on a go forward basis in terms of how are we either going to see those trends continue to accelerate or perhaps shift to a different type of pattern or trend?
Yeah. So obviously the last, no pro forma I had predicted a global pandemic, and that was a really trying time for us as a business. I often call it the darkest hour of revenue. It's easy to talk about today, but like in a moment when revenue drops by 70% and people think travel will never come back, it is immensely scary. And I remember our team just like going really locking arms and working day and night across the different elements of the business to ensure that we got through that time, not just to salvage the business, but to get through it stronger. In that moment, we had a debt term sheet pulled, our runway dropped to low single digits. We had yet to fully transition to management agreements, so we had to renegotiate quite a few contracts, but at the core of our business is trust with our partners. We had to do that in a way that ensured we built trust rather than destroyed trust. It was really hard times. I sort of think hard times build hardened companies, and our team feels really battle tested as a result. But that was a moment when all trends went out the window. What we're seeing today is kind of an overarching secular trend and a more recovery from COVID underpinning as well. The secular trend is a trend that we've seen for the last 15 years and maybe has accelerated a bit because of COVID. And that's the trend for flexibility, seeking and digital enablement. So people have increased their desire for a flexible life in the last decade quite profoundly. And I think, the COVID obviously accelerated it. There's maybe a little bit of a retrenchment, but fundamentally, we've kind of like moved up on the graph of how many people work a little bit remotely, take an extra day on their weekend trip and experience a city for longer, spend weeks on the road. That it always starts off as a trickle, any trend, then grows. And we're seeing that continue to grow as a secular trend, which is a fuel behind the need for what we're delivering at Kasa. And similarly, people have an interest in using their mobile device to control their stay, to have a hospitality experience that's increasingly personalized and familiar. And so those are trends that have persisted and perhaps accelerated. Then there's just a complete shellacking that COVID did to anything that like any hospitality trend line, and some of those, business travel was down, leisure travel was international travel was down. We're just group travel was down and recovering quickly. This is the year where we kind of saw all of those come back to prior, perhaps not peak or full trend, but pretty close to it. And so I think we're kind of back to normalcy in the hospitality world in terms of kind of like the traditional segmentation of business, group, international, business transient, leisure, et cetera. And then there's you kind of overarching secular trend of flexibility and digital enablement has continued to grow. Perhaps it has accelerated, which is exciting. One last thing, and less consumer related, but supply in hospitality has not been has not been quick to react, because first you had COVID, for which made it really difficult to build hotels when you weren't sure in 2 years there would be enough demand to satisfy the investment. And then the 10-year gapped out, which made financing really difficult in the last year to 18 months. And so the supply picture looks really muted in the next few years for hospitality, while demand is sort of back, which is a nice setup for us and others in hospitality.
Yeah. So how do you think about I don't know if it's a headwind, but the regulatory kind of risk of what you're doing? I mean, I know that there's a lot of headlines around short-term rentals across the country. Even, build to rent and SFR is, getting its fair share of headlines. You and I probably agree most of them are unfounded, but they're there regardless. And so how does that impact Casa's business? Or are you operating in a kind of a different paradigm where it's not directly impacting what you do and your kind of access to supply?
Yeah, it's a great question. I think about this first from, are we doing something that's helping the world, or hurting the world? And obviously there's a dire need for housing in the United States, and there's a dire need for various types of housing too. There's housing needs to match the way people live, and as people demand furnished rentals and demand flexibility, there should be housing options to match. And then generally there should be more housing supply, given the U.S. is quite significantly understocked for housing. What we've seen, the narrative obviously is, you take a unit of housing from unfurnished and then you furnish it and rent it out. It's still a unit of housing, but it's used for a different use, and you take away from the traditional 12-month unfurnished housing supply. What we've actually seen is, in many cases, there are developments that have shovels on the sidelines because the owner can't capitalize can't raise debt or equity, given the current interest rate environment, given how much supply is coming online in certain select markets. And incorporating flexible furnished rentals into that business plan often gives those developers the juice that they need in order to to get a marginal deal, or even like less than marginal deal, over the hump. And so you take 20-30% of that building and operate in a type of housing that the world needs. Then you build maybe it's a 300 unit building that wouldn't have been built. 60 of those units are furnished flexible rental units. 240 are units that wouldn't have existed. And so it's a real multiplier effect that exists where you take a small percentage to create a larger amount of inventory. That's kind of like more of a policy part of that question. Your question around how it affects us, we need to operate within the rules of hoteling and short-term rentals in any given jurisdiction. So our properties and our partner properties will go through the right licensing to be a hotel within any city, which means that not every building will work because some buildings are zoned for commercial and hotel use and are built to that standard, and other buildings are not. And we have the team that can provide owners with that insight. They can also use local land use council. We can also help owners to adjust their building appropriately to ensure that it can be future proofed to enabling this use down the line as it continues to grow. And because there's a restriction on which buildings can and can't work in the model, it creates a competitive advantage to the buildings that figure out how to operate and be licensable as a hotel. Because down the line they will have more resilient cash flow, right? One building can't and didn't do the work up front in a development or maybe post delivery, and so when multifamily fundamentals drop, their cash flows do as well, and another did, and so they're able to program in flexible rentals and put a floor on the NOI of their property as a result.
Interesting. And so, just to clarify, and I think you may have said it, but just so I'm crystal clear, are your properties operating then both as kind of multifamily assets and hospitality assets, or is the preference to convert everything to a hospitality use case? I mean, how do you think about this? Because I mean, we're talking about short-term rentals. I associate that with hospitality, with multifamily, but then we're talking about hospitality as a kind of more durable form of sustaining this type of operating model.
Yeah, it's a good point. So we operate in two physical form factors: apartment building, in which we take a floor or multiple floors or the entire building. But the physical form factor in that case, it refers to the fact that the units have kitchens and living rooms and multiple bedrooms. We operate all units that are casas as furnished any length of stay rentals. So we allow people to stay for a few months, but on average, people stay for a week or so in those properties. And then we have a physical hotel property that has no, we operate the entire building and the units have no kitchens and living rooms. We operate them in a very similar way, but it's obviously a different physical experience for the guest. And on our site and across channels, we merchandise them to be very clear what you're getting as the guest.
Perfect. So, I mean, I think what's interesting, and we were in New York last week at an event together where we were talking about this idea of like operating company and property company, or opco and propco. And, what I've observed is exactly what you've explained, which is a lot of asset owners, especially in this, higher interest rate environment, tougher market conditions, are looking for ways to kind of generate alpha, like, alpha for their properties. And a lot of times it's applying a different use case or a different kind of technology enabled approach. How, like, where do you fit into this kind of opco propco model, and kind of how has that impacted your business as there's more dollars focused on this opco propco model to create a kind of a bigger ecosystem?
Yeah, so we are huge believers that aligning yourself with capital that deeply understands the operating business and the value that with real estate capital that really understands the operating business and the value that operating business can generate for the real estate, aligns incentives and allows both parties to win in a more substantial way. So the real estate investor might get upside in the operating business, and because they deeply understand the operation, have a distinct advantage in sourcing and managing their investments. And for the operating business, abstracting away from Casa, an operating business that whose fundamental value is to improve the P&L of assets, that business can better select properties and better program those properties to really fit the mold that allows them to deliver on their values. So it's kind of a finding that right match aligns interests and delivers better outcomes. We have built and are really proud of a really sophisticated real estate team that has walked a mile in the shoes of many of our partners, and that team, while is small and so can't, that, to your previous question, can't underwrite and source every deal, will is focused on a select set of strategies that we think in this moment in time can deliver asymmetric returns to the real estate investor, and do so in the places where we create the most value based on the data that we have across our portfolio. And when I say asymmetric returns, I think that's like the holy grail of real estate investing. It's very hard to find, or any investing really, but when you find it, it really is magical. And for Kasa, that means if you have a business plan in which Kasa is kind of part of the secret sauce. Your worst case scenario is everyone else's base case, right? If it doesn't work with Kasa in a hotel, you run the hotel the traditional way. If it doesn't work with Kasa in an apartment building because we're not generating the income that you expect, you convert the building back to traditional multifamily. Worst case is the NOI you would have gotten otherwise. But your base case is, instead of a 5.5 yield on cost, closing in on a 10% yield on cost and a higher cash on cash return. Your base case is significantly higher. And my general view is, when the cost structures are increasing, and when there's been a proliferation of capital on the equity side in the real estate world, there's going to be a survival of the fittest, right? Investors who don't have true differentiation in how they source and manage the properties, I think won't be as, we'll look back and their returns won't be as strong as ones that have a real edge. And that edge could be how they lower costs, how they source properties, how they program their properties to meet consumers where they are. And that's what a partnership where there's an operating business that can show that, prove it over case studies, over market, and partner with capital that then can, like, in a sniper way, deploy the capital to the opportunities that are the best from a risk adjusted perspective returns. That's where I think there's going to be magical pairings, but I think that there will be few pairings that work really well. So the investor on both and the operator on both sides needs to be quite careful in selecting the right partner and structuring it to align interest.
Makes total sense, and quite innovative too. I think we're going to see a lot more firms looking to find groups like Kasa to partner with in order to drive this asymmetric return. So we only have a few minutes left. Let's talk about kind of what you're most excited about going forward. We've emerged from the darkest days of COVID, as you've said, and obviously we're still operating in a pretty tough market environment with interest rates high. We've got a challenged global macro situation, which we don't need to go into right now. But if you kind of look into your crystal ball and look out over the next 6 to 12 months, throughout kind of calendar year 2024, what do you anticipate might change? What are you most excited about? What are you looking forward to most for your business?
Yeah, so the setup, I think, is we were in a market downturn in real estate. Sam Zell said it really well when I was an undergrad at Penn. Is cash is king. That's kind of the trope. We had very good fundamentals going into this kind of crazy capital environment, and so raised our largest round of equity financing to ensure we had the largest balance sheet that we've ever had as an operating business, and we're able to control our own destiny in terms of how we deploy that capital and operate. So coming into this with a position of strength is exciting, and we know that we're in a in a unique position relative to others. Uh, our goal forever, you will ask me this question in 18 years, in 5 years, in 10 years, is to make our real estate partners more money in their investment. And often that's by delivering a better experience to the guests that we serve. It's by optimizing ever further the cost structure of the properties. And so we're continuously investing in our systems to do so. One of the things that is perhaps the flavor of the week, but I think we all realize that's different for this technology than it was maybe for NFTs and crypto is AI, right? We're very excited in the applications of GPTs, and we're using specifically OpenAI's model, but you can have any LLM interact with whatever you're building. For Kasa, the application is extremely direct and specific to our value proposition. So we're already using GPT-4 to help answer our guest questions more quickly, more accurately, and right now it's both a co-pilot and direct. So if you text Kasa, some of your questions will be coming directly from GPT-4. Some will be coming from our team that is informed by GPT-4. Some will be manual responses. What that does is makes the experience for the guest faster and better because the answers come faster and they're more accurate. And for the owner, it lowers the cost structure. It's a much more efficient deployment of our resources. That's kind of like base level usage of AI. What we are in parallel doing is using it to inform how we personalize a stay for a guest. So last time, Brandon, you stayed with us, you might have asked for extra pillows or the nearest coffee shop near a Casa. Next time, we note down, GPT-4 will look at your history of communication, say, Brandon likes extra pillows and a local, a coffee shop. We might, before your stay, put in pillows, additional pillows into the unit and text you the day of and recommend a coffee shop. It's kind of that like magical experience that that we already were doing as part of our model, but AI makes us do it better and faster and more reliably, and that's core to our value proposition. So we'll always deliver more profit to our owners as part of our goal, and AI is one of the mechanisms that's accelerating that. And then, looking further out, I'm excited to have real estate that's just fully flexible. I think apartment buildings need to be even more flexible than we make them, flexing up and down how much is furnished, how much is unfurnished, allowing residents to host and have Casa be the co-host of those stays, and really building a membership experience across the country and world where you can feel like you're part of and this is maybe, a lot longer out, but I think is a real need for a feeling of belonging, community across city to enable true flexibility. And so that's maybe the long term. And then lastly, in 6 to 12 months, there's one or two very interesting real estate propco opportunities that our team has been spending a lot of time on, and I have been alongside them, and they feel more they feel more relevant today than at any point in the history of Casa, given our value proposition, strength, our data, and then where real estate prices are. Those are a couple of things we're excited about.
Awesome. Well, if people want to learn more about Casa, they want to get in touch with you, they want to see how one of their properties might pencil or qualify for working with Casa, what's the best way for them to learn more, to reach out to you?
Reach out to me at roman@kasa.com. It's KASA.com, or on LinkedIn. I'm usually fairly fast to respond.
Awesome. Well, I've really enjoyed this conversation today, Roman. Congrats on everything that you've built so far at Casa, and I look forward to continuing to follow the journey. It's great to reconnect with you and appreciate you sharing the story with us today.
Likewise, we're at day zero and always will be. And it's been exciting to watch Juniper Square grow and deliver value to your clients. So very much appreciate your having me on.